In the last month, we've had inventory tighten, interest rates drop, and new zoning laws which could reshape San Francisco real estate. Hey everyone, my name is Alex Epstein. I'm a realtor here at Vanguard Properties in San Francisco. If you ever have questions about the San Francisco real estate market, buying or selling here in the city or nearby, please don't hesitate to reach out to me. I'm more than happy to be a resource. In this video, we're gonna go over SF market data, interest rates and ARM loans, what I'm seeing on the ground as a realtor, some big changes in San Francisco real estate, and how this affects you as a buyer, seller, or investor in 2026. Starting off with single family homes here in the city, we have massive year-over-year growth. As you can see here on the screen, almost everything is going up other than days on market and inventory. The market is extremely competitive. Notably, inventory has dropped almost a third, while buyers are typically paying above list price. And a median home is selling in less than 2 weeks. That scarcity in inventory is exactly why we're seeing double-digit growth year over year. Moving on to condos, which continues to be one of the hottest markets here in San Francisco. As you can see on the screen, again, almost everything here is rising other than days on market and inventory. Days on market is down to 32 days from 49 days, and inventory has also dropped almost a third. Overall, condos had a breakout month. Contract activity almost jumped 40%. Furthermore, inventory tightened and days on market decreased. Heading into 2026, this is the strongest condo activity we've seen since before the pandemic. Next, we're going to talk about interest rates. For a 30-year fixed loan, rates are at mid to upper sixes. For a 15-year fixed rate term, rates are in the low to mid sixes. ARMs are typically in the low sixes, sometimes even in the higher fives, depending on lender credits and buy downs. Generally, rates have gone down almost 0.5% from last year. And due to that, we're seeing a notable shift in buyer activity. ARMs are becoming more attractive again. They don't appear to be as risky as they were in the 2000s. A 5.6 or 7.6 ARM can offer significantly lower monthly payments. For someone that doesn't plan to hold their mortgage long term, this could be a great viable solution. They're becoming a strategic tool for many people, and it's just one of the many options that everyone should be aware of. Now on to what I'm actually seeing on the ground. Here at Vanguard, we're typically seeing more activity in open houses, offers increasing, especially on single family homes under $2 million, sellers receiving stronger terms, meaning that buyers are removing contingencies and closing quicker. Condos are seeing renewed interest, especially in walkable neighborhoods like Cow Hollow, like the Mission and Marina, due to AI hiring and office activity. And lenders are aggressively offering rate buy downs, ARM options, and closing cost credits for qualified buyers. Now, moving on to some important San Francisco real estate news. One of the biggest news items this year is San Francisco's rezoning efforts. This aims to increase building heights and densities in certain areas. The goal here is to make building houses become easier, especially in mixed use in areas with great public transportation. Now, to briefly talk about what this actually means, more areas are going to be eligible for taller buildings. Often this is 2 to 4 stories higher than they are now. There's going to be a simplified permitting process in designated zones, potentially thousands of new units over the next decade. All of this will result in early investment opportunities in affected corridors. If you look at how Mission Bay transformed in the last decade, rezoning played a major role. These changes could create similar long-term opportunities. Now, what this means for you if you're a buyer. Rates are improving, which should benefit you and generally mean better affordability. Adjustable rate mortgage loans are creating new entry opportunities. Competition is rising again for single-family homes. While prices are rising, condos still offer relative value, and rezoning areas may have long-term upside. Areas that are being rezoned may have long-term upside, which could be a great investment and feature long-term appreciation. Now, what does all this mean if you are a seller? Well, for sellers, low inventory means that this is still a seller's market and you still have the advantage. Buyers are more confident than earlier in 2025. While pricing matters, strong homes are performing well. And lastly, going into January until March might be even busier than last year. Now, some of my personal predictions are things to look out for. If interest rates drop below the mid sixes, we might see some pent-up demand and a strong market going into spring. Regarding condos, while prices have risen, I still think that there's more room to grow here. And I think that 2026 could be a great time for the condo market. Condos are likely to continue to generate momentum going into 2026. About single family homes, I think that anything under $2 million is going to continue to be extremely competitive. And lastly, I think the rezoning efforts that are taking place here in the city are going to garner a lot of investor and development attention. And that's going to do it for today's video. Again, my name is Alex Epstein with Vanguard Properties here in San Francisco. So if you ever need help buying, selling, investing, or just want to talk about the market, I'm more than happy to help. and it would mean the world to me if you would subscribe to keep up to date with my content. Thanks. Power went off. It's the end of the world. Okay. That's a break for next video.